Hi, my name is Max Evan, and I'm a first year going to Deloitte for my summer internship.
Hi, I'm Caitlin Frost. I'm a second year going to McKinsey Atlanta full-time. I picked actually a Bain case, it's called Euro Seafood, from the Fuqua casebook to give today.
Cool.
Ready to rock?
Let's do it.
Okay. So one of our private equity clients recently acquired a leading European seafood restaurant chain. The chain owns and operates 700 restaurants across Europe. Same-store sales, which they abbreviate as SSS, declined last year. The private equity parent has aggressive expectations for improved business performance. How can the client improve same-store sales?
Okay. Let me just write this down. So if we can recap really quickly, one of our clients is the private equity firm. They acquired a European seafood chain, 700 restaurants across all of Europe, and they've had sales decline, same-store sales decline. And they have really high expectations. Obviously, they probably want some sort of an exit from the business if they just acquired it. Do we have any expectations for the firm or for same-store sales?
That's a great question. Right now, just assume that they're trying to be profitable and improve same-store sales.
So just return to profit or be profitable, improve same-store sales. Okay. And in terms of geographic footprint, is this chain in cities or is it limited to one area of Europe? Do we have any more information on
Let's
that?
assume it's all across Europe, Eastern and Western, but no preference urban versus rural.
Okay, no preference. Okay, that's good to know. Okay, if you don't mind, can I just take a couple of seconds to jot down some thoughts about this?
Definitely.
Okay. So I've got a couple of things to really think about. If we're thinking about a decrease in sales and reversing that, and then also this other objective of profitability in general, I want to look at the company itself, Euro Seafood, and then anybody that it's competing against, and also the environment in which the deal was made, as well as the environment in which Euro Seafood and some of its competitors exist. So for the chain itself, for sales, we need to think about just revenue. You know, where's that coming from? Either reversing a trend or finding new ways to get that revenue in. So thinking about maybe some of their pricing and also some of the volume, what their traffic in the store looks like, what their customers look like. Are they staying a long time? You know, maybe they're ordering a little bit less than they are. Maybe they're ordering lower margin foods. There's a couple of different things that we need to think about. And then just back to that profit objective, cost. You know, maybe that this is an economic trend. It's not something that we can control within the chain. So maybe we have to think a little bit about cost. My gut, though, is that we're going to want to think about just that increase, flipping that increase in sales around, and maybe thinking about if we can charge slightly higher prices to compensate, or if we can find a way to boost people getting in and out the door a little bit more. On the competitor front, maybe the market's gotten crowded. Maybe a couple of new entrants come in. Maybe larger chains have identified seafood as a niche market where they can really make some aggressive gains. So it's possible that they have some more aggressive competition, and we'll have to think about a strategy to react to that. Or maybe there are new locations or new items that competitors are offering, sort of that are indirectly causing traffic to move away from Euro Seafood. Could be a really recent thing. Different marketing, maybe they're underpricing Euro Seafood. That would be a big concern of mine. Maybe my competitors are a little bit lower. And then also the environment. These things are a little tangential, but we really need to consider them as well. Maybe there's some new food trends, both in the restaurant world, but also out of the restaurant world. Like, I know I've been trying to cook at home a lot more because it's generally tastier sometimes, but also, maybe there's like changing tastes in general. In the US, like different types of food have really outpaced things like Red Lobster, which it sounds like maybe this is a comparison chain to or something like that. And then I'm also just kind of curious, whenever we're working with a client, what the PE firm really wants out of this, and also why they acquired them. That might not be relevant directly to this objective, but it's something I'm going to think about sort of in the background as we address some other concerns, especially around price and volume of the chain and the menu items. Yeah, so that would also probably be where I'd want to sort of start to look down.
Awesome. Where would you like to start? So
definitely start to look at either the price or the volume. I really want to start to drill directly down into the sales problem.
Great. What do you think might be some drivers of same-store sales? You touched on a few, but if you could blow that out for me, that'd be great.
Yeah, so we're just going to write this down as we talk, SSS drivers.
Perfect.
So I'm going to say price, but it's actually going to be as a function of who's underpricing. So if price drops, then maybe we're thinking volume rises, and then we have to navigate that basically price curve to figure out where there's an optimal point where sales could be at a level that we'd want. The other thing is foot traffic and location. So that's sort of our really like quantitative piece, but foot traffic seems to be a big one, or even parking lot traffic, maybe cars, maybe there's like parking lot encroachment, or the areas where they are have really built up a lot of traffic, so people can't park outside the restaurants. So basically traffic in and out the door would be a big one. Another one would be brand. I mean, again, I would not want to go to Red Lobster, and you'd have to pay me to go to Red Lobster. So maybe Euro Seafood used to be a great chain, or maybe 2 or 3 years ago, and now we're starting to look at this decline in sales because people are going to Chipotle instead, or whatever the European equivalent is.
Interesting. Okay, so we actually have some data on possible drivers of same-store sales.
Okay.
Why don't you take a look at the exhibit and just let me know what you think.
Okay. So it looks like we've got a couple of charts. There's price per item, number of items, and customer traffic. And each one has some changes, same-store sales changes, and then unit price changes. So you're basically saying this is the equivalent change in sales for the unit price, and then we also have R-squared values. So these are, I guess, regressions that we've run across them. The big thing that pops out is that the R-squared values of 2 of these 3 are insignificant. I mean, they're 0.04. And usually, I mean, if we're talking real data analytics, like 0.15 or 0.2 is sort of that minimum threshold where we start to get usable data. So if it's okay with you, I'm not even going to look at those. It just doesn't seem like we're finding answers there. For customer traffic, I'm going to look a little bit more at that. So it looks like there's a really big change in sales, if I'm reading this right, with a decrease in traffic. So the delta for same-store sales is bigger with a monthly traffic change. Am I explaining that right, or is that?
No, I think you are. And what do you think might be driving changes in customer traffic?
So I'm not necessarily sure that we can pull that from this graph, but I think, again, we can go back to some of the things we talked about earlier, which are price, availability of parking nearby, or availability, accessibility, and also brand of the chain. I think those could possibly be some big drivers. And then if we had to go further, I could probably think of a couple more. It's up to you.
Talking about competition, what do you think, what's your sense of competitiveness in the restaurant industry right now?
It's really high. I mean, it's a super competitive industry on every level. This seems to be, again, positioned as like almost a fast casual chain. So that's a really competitive space, and you have people sort of encroaching up from the fast food market that are trying to upstream, as well as restaurants that are trying to downstream to say, okay, we have takeout, or we have faster turnover. You can sit down, maybe take a number and order, and we'll bring you your food. So across the entire spectrum, it's incredibly competitive.
And what kind of data would you want in the competitors to better understand the market?
Yeah, I'd want to know price for sure of competitive offerings, but I'd also want to know what their foot traffic looks like and maybe if their locations are near ours, because maybe some competitors are building out toward closer to our locations in a deliberate bid to steal some of our traffic. Maybe they know they have better offerings or more compelling offerings in some way.
That's a great thought. Okay, I don't have geography for you, but I have
That's
some of
all
the
right.
price data you asked for.
Okay.
So this exhibit is showing you our client as compared to the 4 most competitive chains.
Okay. So just, if you don't mind, I'm just gonna take 1 second to flip through this.
I don't know.
So it looks like we've got average price per menu item, and then the size of each bill, and then the margin that we're making. Is the margin on the total? So say basically like if your average menu price item is $11 and you've got 4.4 on your bill, is that margin sort of on that
For the
total?
whole bill.
Okay, so if on your like $50 check or so.
Exactly.
Okay, so that's a really healthy margin, especially compared to the others, which are all smaller. I mean, chain 4 is half the margin, and the prices are lower. So it doesn't look like we can really raise price to address sales at all. I mean, we're already the highest in the industry, and people are ordering relatively competitively versus other ones. I mean, we're right in the mix with 4.4 items per bill. Some are a little bit higher, but some are a little bit lower. So yeah, we're sort of right in that difference.
So if we can't maybe mess with price or bill size, what else could the client play with to increase their sales?
Yeah, it's got to be a volume thing. And again, volume, I think, let's break it down a little bit further.
Yeah, that'd be
So
great.
you've got traffic in, and then you've got your 4.4 items here per bill, and then they're out. But the big question is how much can you fit in the store? So literally, how many bills can you get going in that store before you send them out the door the other way? So maybe like throughput would be one way to say it, or capacity would be another way to say it. Those I think would be the terms that I'd be thinking about.
Definitely. And what determines capacity in a restaurant?
Sorry, let me just write these down so I don't forget.
Keep going.
So capacity in a restaurant, in a fixed sense, if we take a snapshot in time, it's how many people can we fit in the place at once. So in McDonald's, how's the line set up? In a Chipotle, how are the tables laid out? Something like that. And then if we're thinking about it across time, sort of as a throughput thing, it's how many people can we fit in there now, but also how quickly are we serving them and how efficiently are we serving them. So I guess there's two places we could drill down. It's sort of efficiency, but also layout would probably be the restaurant term.
Yeah. And what kind of data would you want to see if there was any room for improvement?
I'd want to know, so we'll go for one of both.
Yeah.
I'd want to know on the throughput side or the efficiency side, how quickly or how efficiently we're serving our customers relative to our competitors. And on the capacity side, I'd want to know if there's room to improve. If we have a standardized store layout, is there room to improve that? Maybe stores are doing ad hoc, because that would be a real nightmare if we had 7,000 different store layouts, but maybe if we could have a standardized template that was really efficient, that could really help.
Awesome. So I do have data for you on occupancy in the
Okay.
restaurant. This is occupancy during peak hours.
Okay.
Let's assume
Alright.
this is a one restaurant snapshot, but
Okay.
assume that they're all the same across the chain.
All right, that's really helpful. So customer count, so this is basically accounting for 100% of our customers.
Exactly.
If I read this right. And then this is table size. Okay, so give me 1 sec to break this down as well, because there's a fairly dense set of things here. So it looks like what we have is we've got a couple different types of tables, and the majority of those are 4-person tables. There's a ton of them there, but most, if we're looking at party size, most of these tables are taken up by people with less than 4. So you've got parties of 1 fitting that 2, and then this big chunk of people with 2 and 3 in that 4. So that's a major problem, because even if we don't start to look at the 6 or 8 or 9 plus, which is a really tiny sliver of customers, we're sacrificing a lot of capacity right in this 4-person table zone. I mean, if you have to take a wild stab, it's like 40% or 50% of our capacity. Could probably get more mathematical with it if you want, but
Yeah, well, let's talk about this for a second. So I think the ratio of table size of 4 to party size of 2 is very relevant.
Okay.
What would happen if we took one of these tables and broke it in half? So you're just adding 2
Yeah.
seats per restaurant. Could you help me figure out what's the bottom line impact of that one change?
So if you so we're saying basically 50% of our tables are tables of 4. and 50% of our customers
And
are
for this
parties
instance,
of
we'll
two.
just change one of the tables
Okay.
to 4.
Okay, so that's pretty easy then. So if we have one table of 4, that's one party of 2 people right now, or a 50% probability of one party of 2 people, and we're breaking that now into 2 tables of 2, correct? So we're now doubling the capacity.
Exactly.
We're saying,
You gain
yeah,
2 seats a restaurant.
exactly. So yeah, it's probably a little bit more mathematical than just straightforward 2 seats a restaurant. Yeah.
Yeah. So what does that mean in terms of additional sales?
So if we're thinking about this is an item per bill, and we think that half of these people sort of fit under, if we're saying that maybe some of these are above and some are below, we can probably increase sales by about 25%, given that we're splitting this section up and we're getting 2 additional people for each of these, if that's 50%. If you want, I can give you some numbers about that.
Yeah, that'd be awesome.
Okay, so for that, is it safe to assume then that given this 4.4 items per bill, is it safe to assume that we can just sort of take a piece of this and say your average party of 4 orders 4 items per bill, or
Yeah.
or
Yeah, I think
okay,
that's fine.
and then your average party of 2 orders 2 items per bill?
Yeah, I
Okay.
think that's a fair assumption.
Okay, so what you're saying here is about 75% of your. Do you want me to get that, or do you just want to stick with this
Yeah,
sort of
actual
2?
euro numbers would be awesome.
Okay, cool. So if we have 11 euros per item, and we're actually doubling the amount of capacity that we can get from those tables, then we're gonna have twice as many parties of 2 that can fit in there. So let's take a look at this. So is it safe to assume basically that we're doing this math by saying, since we've only got this many people that fit in here, we're now doubling the amount of people that we can fit into this party of 2?
That's definitely a good way to approach it. But think about it
Okay.
just as these 2 additional seats, and then if we wanted
Okay.
to, we could always scale it up.
Okay,
just
that's
2
fair.
seats at a time.
So in that case, what we're saying is for 2 additional seats, we're getting an extra 22 euros of sales. Okay, I wasn't sure, sorry, where you were going with
No, that's
that.
totally fine. And that's 22 euros of sales per what?
Per table. Yeah, per table.
And how many times do you think the restaurant seats that table in a typical day?
That's a good question. This is during peak hours, so there's probably some occupancy fluctuations. So if I had to take a guess, it's probably, if we have peak hours between maybe 4 and 7.
Yeah, and let's just focus on peak hours. I think that's a
Okay.
great idea.
So peak hours are between maybe 4 and 7. This is a fast casual place, so it probably takes about an hour to turn a table over. So probably 3 times for that one peak hour area.
Yeah.
Yeah.
I'm gonna push back a little bit because it's Europe, and I feel like
Okay.
the Europeans linger. So let's say
That's fair.
maybe 2 turns
Okay.
in their occupancy period, but it's a good assumption.
Okay. Okay. So then what we're doing is we actually have, for one table alone, it's a 44 euro increase in sales, which is a pretty large increase in sales.
And
when
is
you-
that
when you
per
think
day,
about it.
per week, per month?
Yeah, so that's per day. If we're just thinking about the peak hour period, and then if we figure maybe it's occupied at some other point, we can probably add to that as well. Do you want to extrapolate that out into like a yearly number, or how do you want to?
Yeah, if we could do yearly, that would be great, and then we can just estimate across the chain.
Okay.
Assuming that every restaurant is exactly the same.
Okay. Before we do that, since there's probably some other occupancy of this table, can we add, is it safe to assume, can we add probably a couple of euros to this and say it's probably 50 euros per
Yeah.
table per day? Okay.
I think that's good.
And then we're gonna say there's probably 350 usable days of restaurant in the year. Okay. And then what we'll do really quickly is we'll do some math and we'll figure out what those are per day. So that's about 17,500 euros a year per table, per restaurant.
What's your initial reaction to that?
It's a really large number, especially when we're thinking about that on a per table basis. Yeah, that's a really big increase just by breaking one of these tables of 4 into 2. And when we think about the fact that if we push this to the extreme, we've got an extra 25% capacity in the restaurant. That could be a really sizable number.
So given what we've talked about so far, what are your hypotheses as to what the restaurant could do to improve same-store sales?
Yeah, so the hypothesis that I really have is right now is really to focus on seeing if we can break some of those tables of 4 apart into tables of 2 to better meet the people who are coming in the door. That's going to give us more room to have more traffic of parties of 2 in the door.
Are there any risks associated with that approach?
Yeah, there's 2. The first is that we're actually going to have a more empty restaurant and there's going to be crowding. So there'll be empty tables and they'll be crowded next to each other. Maybe having more room doesn't address the fact that the underlying demand hasn't changed. So just because we add more tables doesn't mean more people are going to walk in the door.
Yeah.
So that's one risk, and the people who do walk in the door might bump up against other tables.
So there could be a negative customer reaction,
Yeah.
maybe. So let's, theoretically for a second, let's say that the client says no, they push back, they're not gonna refigure the layout.
Okay.
What else could you possibly think of that we haven't talked about?
Yeah, so I would say probably how we're presenting the restaurant. So maybe a new brand, a new image would be really helpful. Maybe a new layout. Certainly it's way more appealing to walk into a bright, shiny Chipotle than it is to walk into a dingy Burger King. So maybe Euro Seafood needs to revamp its layout a little bit. The other thing that I would say is maybe looking to different menu items. Or if they're really pushing back on changing some of these core things, maybe start thinking about cutting cost other ways so that as sales drop, costs drop a little bit too. That has some huge risks as well when it comes to negative effects of quality of service and quality of experience though.
Awesome, okay,
Cool.
we're done,
Thanks.
well done.